In a pest control company, what sort of financial metrics should I be looking for as an owner? Over the last 10 to 12 years, we've had a sloping upward line, and more acutely in recent years, valuations have gone like this. Now we're going to see the reverse of that. And so when you start to think about metrics in your own business, you want to have portfolio or recurring revenue. And so you want to sometimes trade off the bigger one-time items for longer term recurring revenue. And you know, in a perfect world, you're at 80% plus recurring, right? If you look at your business and you say 80% of my business is an ongoing revenue where I'm billing monthly, I'm billing quarterly, what have you, but it's a ongoing service at a regularly scheduled frequency. When I think about cash flow margins, you know, I tend to use EBITDA, so earnings before interest, taxes, and amortization. When we go out to the market, we always use EBITDA, which includes depreciation. And why we do that is because I think in this industry and most resi services businesses, depreciation is a very good approximation for capital expenditures. So if we look at pure play EBITDA on an adjusted basis, meaning you've normalized your economic benefit to the business, you know, you might be paying yourself a salary of $250 a year, and if you're really only doing $50,000 worth of work, you've normalized that. You've added back your discretionary items, and you ultimately want to be at least 20%. That's, in a perfect world, you're north of 20%. The closer you can get to 25%, the better off you'll be. And of course, there's an interplay between profitability and growth rate. The higher the growth rate, typically, the lower the margins because you're reinvesting back into the business. But from a cash flow perspective, you want to really target that 25% if you can do that. When I think about growth rates, I've always said you really want to try to be at double the rate of real GDP. Right now, you know, real GDP is going into the negative territory. But if you look at some of the larger players right now in 2022, the majority of the growth is coming from price increases, right? I would say 2/3 of growth this year is price increases as opposed to actual real growth of adding on new customers and retaining old ones. A sweet spot for a resi service business is really in the high single digits to low double digits. You know, if you can focus on 10% growth per annum, you're going to be ahead of the extreme majority of your competitors, and you're also going to be ahead of the publicly traded guys. It's hard to do, and it's hard to do at scale the larger you get. You know, in a $500,000 business, it's pretty easy to add on 500 or 600K in revenue. You run a $25 million business, that gets more and more difficult. But your target should be 10%, and you should really be in the high single digits if you can swing it. In pest control, you know, we tend to see gross margins in the low 50s, all the way up to 65%, give or take. When I look at gross margins, to me, it tells me a lot about your pricing and your efficiency out in the field. If you've got low gross margins, I might say, well, are your technicians driving all over the place? If you have low gross margins, I might say, well, wait a second, are you not priced at least at the median of the market? Try to get your gross margin as close to 60 as you possibly can. And if you can do that, it means that you're probably routing things correctly, you're not in too wide of a geography, and you're probably doing well on pricing. Let's go back to the pricing discussion because I think it's an important one. And you know, we've talked about it on the Buzz quite a bit. I've had a lot of conversations over the last 3 weeks since I've been back with clients, and I have continued to say, now in December is a great time to audit your customer base and think about your spring price increases. You're gonna have to do that again. I mean, we have core CPI running super hot still. I think we live in a world where, you know, I don't know that inflation is gonna be 7 or 8% for that much longer because it has peaked. But it's very likely we might see inflation at 4 to 5% over the next 5 years. That is a distinct possibility. So you need to make sure, you know, a lot of you go years without raising prices. So do your studies now, benchmark what the bigger players, not the small guys, but look at what Orkin and Terminix are doing in your market. Look what rentokil brands are doing in your market. Try to understand where the big guys are get as close to them as you possibly can. And if you can pull it off and you've got pricing pressure, come above them, because inflation is going to be with us for a while. And I think it's very, very important to get out in front of that.